Well, my first guest joins me in the studio. Ray Smith is the CEO of Trycera Financial. Their stock symbol's TRYF. Ray, great to see you.
Great to be here, Don.
Now, it's been a while since we had you on the program. I've always been really fascinated by your business model and some of the things that you do. Why don't you give us a brief overview again?
Sure, absolutely. We help consumers qualify for loans. We look at their money, we help them put that in order, a personal budget, and we also look at their credit to see what's holding them back, if it's errors on their credit or if it's items that they pay every month that are missing off of their credit report. And then the last thing we do is we help them put a long-term plan together so that they can pay down their debt and turn their liabilities into assets and really create a nice portfolio for their retirement.
What's really unique about your company, though, is that you are giving people the opportunity to get recognized for items that are not normally on their credit report. Can you tell us about that?
Yeah, absolutely. So people make their rent and their utility payments and their insurance payments every month. If people have a mortgage, it automatically gets reported, but people's rent doesn't. If they're going to apply for an insurance policy, the first thing the insurance company does is pull their credit and see how their FICO score is, and that dictates their premium in a lot of circumstances. But yet when they make that premium payment, it never gets reported to the bureaus to help their credit. And so we go through and we find those missing items and we help those items get put onto their credit file so that lenders, when they pull that credit report, they see a more complete profile of the customer.
Well, when anybody's doing a budget of family finances, of course, the things they take care of first are rent and food and communications. Those are primarily important because you have to have those things. Maybe they got in a little bit of trouble with a credit card, and what you can do is you can show the credit bureaus, well, look, this guy made his rent payment on time every single month, but he's not getting credit for that.
That's absolutely right. And then a lot of problems with the budgeting systems out there is the first thing it does is start with how much do you make? And they try to create a budget. Well, we don't care how much you make. We want all of your expenses put into the system. Everything that you know in a finite bucket that you make payments on, rent, utilities, all the traditional stuff. But yet if you have a car, it needs to be registered every year, and it's about the same amount. So we put birthdays, anniversaries, holidays, everything into the program. That way there's no surprises. And then we ask you, how often do you get paid? What's your pay frequency? And our system tells you how much you need to make, which is different than most other programs when they start with how much you make. And now you know whether you're living above your means or below your means and how to properly plan your finances.
Now, another thing that we talked about on this program the last time you were here is a program you have working with auto dealers. Now, as we know, anybody in the car business, it can be very frustrating. Take a customer all the way through the sales process. He or she wants to buy the car. You go through all the paperwork and then, oh my gosh, we can't qualify because the credit is a problem. You have a program that works with car dealers. Tell us about that.
Yeah, so we wanted to focus on a place where we could capture their attention. And when they're at that point, when they just got denied off of that, or for that vehicle that they really want to purchase, now they'll listen to us. And so to get us in contact with the customer, we've come up with a live agent video kiosk. We place the kiosk at the dealership. When a customer gets turned down, they go over, pick up the handset, and on the top screen, one of our agents appears. And then there's a video camera there, so our agent can actually see the customer while they're still at the dealership, and we can find out where they're at, what's holding them back, what their trouble is, and then we can help enroll them into our program so that they will qualify for that car loan. And then the dealership wins, the salesman wins, the customer wins, and we win.
And I spent many years in my early career in the ad agency business, and car dealers and car manufacturers were some of our biggest clients. And I can remember them telling me that when someone walks out of the dealership after a sales process goes bad, it's an 80% chance they'll never come back. Your program helps the dealer by keeping that person on the showroom floor even after they've been denied to hopefully correct the problem.
That's right. In that kiosk, we know, since that kiosk was placed at that dealership, we know that that customer came from that dealership, and then we can help update that salesman where the customer is at in going through our program so that the salesman can stay in contact with that customer. And that way the customer doesn't feel like they've been orphaned. They just are out there with no guidance. We are there to guide them, and the salesman is there to guide them. And if we help them properly, sometimes the customer can even qualify for a more expensive car than they could have without our service.
I mean, it's really amazing how important credit is, especially now in the 21st century. But you made a statement to me when we were chatting in the green room that a person's wealth is 5% cash and 95% credit. Can you explain that?
Absolutely, and it's true. 5% of people's wealth is their cash, and 95% is accessed through credit. Think of it, your cars, your homes, all that. If you don't have your money in order and you miss a payment, your scores go down and you get locked out of 95% of your wealth. Then on top of that, your interest rates go up, your deposits go up, and so your 5% gets squished down to about 3.5%. And people in America wonder why they're struggling. Well, it's because they're trying to live on 3.5% of their entire capability. And once we get the money in order, and their credit, we fix it where the mistakes that have possibly happened in the past, and we give them a clear roadmap for the future. Now they can live comfortably on 100% of their capabilities.
I know you have another new program within the company that you're really just announcing this week. Tell us about that.
It's called Successful Habits of the Rich. People want to know why the rich keep getting richer and the poor keep getting poorer. Well, the fact is the rich really manage their money properly, and they know where their credit is at, and they can access whatever they want to. And so that's the whole business model, and we have rich credit, rich money, and rich wealth are the three products that fall underneath that umbrella. And we want to give people the tools so that they can feel not envious of the rich, but feel like they can achieve what the rich are achieving.
Well, of course, you know, I've always maintained that wealthy people almost always are very smart people. They don't make foolish mistakes with their money. And so basically what you're saying is this program is going to help people take the habits of people who are wealthy and apply them to just about everybody?
That's right. See, people spend money because they know they have it, but they don't know where they need it. And our budgeting program shows them the days ahead, how much money they need. And so just because they have it in their bank account doesn't necessarily mean they can spend it on the items, the impulse items that they're trying to find today or buy today.
Now, again, in the green room, we had another conversation about the company in general, Trycera Financial. I know you've been working diligently on getting caught up with your reportings and your filings. Why don't you give us a progress report?
Sure. We worked through the holidays this past month in December, getting 2013's financials put together. That's done. That's been sent off to the auditors, along with 2014. So we're wrapping up, really bringing the company current here by the end of the month or early in February. And then we'll complete our stock reverse sometime in February or by the end of the first quarter at least. So we'll have all of that done. Our new website with our new brand, which I don't know if you're going to be able to show your viewers that on your screen, but we want to launch that here this first quarter and get it out to as many people this year as we can.
Well, now, I think a lot of people who pay attention to publicly traded companies, sometimes they're unaware just how much of a challenge it is to maintain your status as a reporting company and the filings that are involved and required and the expense in getting that done. I mean, you've really gone through a tremendous effort in the last 14 or 15 months.
Small companies have the same requirements that large companies have. We have to be compliant with every XBRL filing mapping out there, which costs extra money. It's about an extra $6,000 to $8,000 a year just to be in compliance, just so we can report our financials in a different format to the SEC. And it is a burden, but the thing about being publicly traded is you're transparent to the investment community, and it's worth it.
Once again, the company is Trycera Financial, TRYF is their stock symbol, Ray. I've watched your company for a number of years. Tremendous amount of progress. Congratulations.
Thank you, Don, and I just appreciate me being able to share with your audience.